Welcome everyone to our Common Mistakes and Pitfalls in Preparing R&D Claims webinar today. You're going to be hearing from Jen Badger, who is our in-house R&D expert and WhisperClaims co-founder. I'm Suze, I'm the commercial manager here at WhisperClaims, and I'll be comparing today. If anybody who's joined us today doesn't already know us, WhisperClaims is the only fully automated R&D tax claims preparation software platform. It's designed specifically for accountants to deliver R&D tax claims quickly and easily in-house with no need to outsource. We've got more than 140 firms across the UK who are already using our technology, and our mission is to enable accountants to provide the best possible R&D tax services to their clients, supplemented of course by our comprehensive range of support and advice. Anyone who's attended our previous events will know that these webinars are designed to assist and help our community to become more confident in discussing and ultimately fulfilling the R&D needs of their clients. So the subject of today's webinar is pretty hefty. Jen's been working as a consultant in R&D tax for many years, both writing and preparing claims for clients and reviewing claims that have been prepared by other providers on behalf of her clients. So the basis of the discussion will be around the observations that she's made, which in general tend to be quite major misinterpretations of the guidance and should be avoided at all costs. Some of the things that she'll be touching on are eligibility, what it means when a claim has been accepted by HMRC, and also when not to claim. We'll have the usual Q&A at the end of the session, so please get all of your questions ready for us. Just quickly, usual housekeeping, if you'd like to chat to us, please have your chat box open and settings switched to panelists. And if you would like to chat to us and the audience, you can switch it to panelists and attendees. If you do have any questions, please make sure that they go in the Q&A box. And if you want to ask anything anonymously, then you can toggle your settings to send anonymously. There's usual upvoting and commenting if anybody wants questions to be raised to the top of the list. So that's from me. Over to you, Jen.
Thanks, Suze. So, sorry about that. As Sue said, so I'll talk a little bit first about actually what eligibility means in terms of R&D tax relief, just to make sure that we're all on the same page. And I'll talk a bit about what it means when people talk about a claim being accepted and how that's not necessarily really a kind of true thing. And then I'll go on, once we've got that basis, I'll talk about the common mistakes that we see in the market that people make when they're putting together R&D claims. And I'll talk a bit about when not to claim on the back of those mistakes. And then I'll hand back over to Susan. We'll have a bit of a Q&A. So here's anyone that's been at our webinars before, we show this one every time. But just to make sure we're all kind of up to speed with what eligible work looks like for an R&D tax claim. So first thing, number one, that the work has to be undertaken in a field of science or technology. So you've got to be able to look at the work that your client is doing and link it back to biology, maths, chemistry, whatever it is. You need to be able to link it back to a field of science or technology. And any work, even if it looks like research, even if it fulfills all the other criteria, if they're doing it in social science, something like that, and I'll talk about this a bit later, it's just not eligible. You've then got to think about the industry baseline. What HMRC don't want to see is claims being made for companies bringing themselves up to the level of their peers. So what's generally done, what's standard techniques, all that kind of thing in their industry. Because what they're looking for is that third thing. They're looking for technical advance. So they're looking for a company that is increasing knowledge in an area of science and technology over and above a baseline. So you can say that at the beginning of the project, this is what was standard, this is what everyone was capable of doing. And at the end of the project, this knowledge has been generated and this new thing, new process, new product, whatever it is, has been made. The fourth thing they're looking for is that along the way, the company meets what they call technological uncertainties, what we call here technical challenges. So that's the point in a project where you don't know actually if achieving that advance is even technically feasible at that point. And that's really, really important. And in any inquiries we ever see from HMRC, they really drill down these days on what's the advance and what were the challenges. So you've got to be sure that you can answer those questions. And then the final one, and again, something that HMRC seem to be focusing more and more on, is the work has to be done by competent professionals. So they need to know that the work is difficult because people that are experts in that area, who are training, who've got experience, they find it difficult. Not because you've not got a hairdresser writing code for the first time ever. You've got someone who's a professional software developer is finding this coding difficult. And they've got to be leading the work, dealing with subcontractors, and actually working to resolve those challenges. So in a very quick summary, that's what an eligible piece of work, an eligible project would look like. Now, this is something I've started putting in all of our webinars as well, because I think it's a really important point to make. You can have all that eligibility, you can have done it all. And what you'll see is a lot of people will say, right, we've got, we prepare claims and we get 100% acceptance. Acceptance is kind of meaningless in this context. So saying that HMRC have accepted a claim, that you've got 100% success rate, doesn't really mean anything. It's really, really unlikely that HMRC read every single narrative in detail, that they check every single claim in detail. They're under a lot of pressure to keep to their 28-day payout aim for tax credits. So they pay out possibly before they've even looked at the claim, definitely before they've done anything in depth. So as I say, that as we say here, the process appears to be that the tax returns are checked, obviously that the numbers are correct in there, and then everything is paid out, and then further checking will be done for some claims. And we don't know the criteria through which HMRC choose which claims to look at. We don't know if it's at random, we don't know if there's certain things they look for, but in general, a certain number of claims, it seems to be around 2% will be looked at in some depth, and HMRC will actually open an inquiry. So the only thing you can say with certainty is that HMRC hasn't asked questions yet. You don't know if they've accepted it unless you've been through an inquiry and they've written you a letter that says, we accept that this claim is eligible and we accept the costs as stated. But generally speaking, because HMRC don't write to anyone, they don't say that they've accepted a claim, all you ever know is they haven't asked questions yet. So I make statements. I've done a webinar that says, for example, care homes are not eligible to claim R&D tax relief. And even though I know there are people in the industry making claims for care homes, I would still keep to that. And a lot of people say, well, we did one and it's been accepted and it's fine. All that means is that HMRC didn't look at that one in detail enough, and there's still a chance they'll catch up with it. So as I say, you can't rely on HMRC not having picked up on claims you've done in the past or claims for similar companies. All you know is that HMRC haven't asked questions yet. So moving on to the kind of the mistakes we make, which kind of follow on in theme from this. So the number one thing when you see a bad claim is that the person preparing that claim hasn't understood HMRC's criteria or hasn't understood it well enough. So I would say most of the time, and it's very rarely a kind of deliberate act of not understanding, is that they just haven't had the time, haven't been able to take the time to really read through everything and understand it in depth. Quite often, this is because people don't go back to the source. So when I first started doing R&D tax relief claims, the first thing I was sat down to do when I started my job was to read my way through the CIRD. So that's the Corporate Intangibles Research and Development Manual. So it is 500 odd pages. It's quite dull in parts, but that is the source. And what we tend to see in claims that haven't been very well put together, the HMRC questions more, the person putting it together has learned through someone else. It's got diluted. So someone at some point in that company or in that chain of people read the guidance, and they wrote a nice little guide for people, and that guide's been amended, that guide's been passed around, it's got diluted, it's got, mistakes have crept in, misunderstandings have crept in, and then the person that's produced the claim has relied on that as being the truth, and it doesn't quite fit. What you'll also see, obviously, is there's an awful lot of misinformation online. So you'll see blogs that will state, for example, that care homes are eligible and it's totally fine. That, for example, putting together a meal plan for people in a care home would be eligible, and it's not true. But again, that stuff is out there. It's publicly available. It's on the internet, and people are learning from these, just from not the source, from things someone else. They've been digested, they've been diluted, they've been put together for someone else's agenda, even. So what you've got to do is be really, really careful about taking the time to understand HMRC's criteria. So as I say here, as an absolute bare minimum, if you're preparing a claim, you have to have read CIRD 81900, which is actually a really, really accessible few pages that gives you HMRC's definition of R&D in a nice high level way. It's really easy to understand. Everyone should have read that. And then the section CIRD, I've missed a zero off there, but that should be 82000, and that gives you a list of all the allowable costs for a claim. And once you read that, you know that any other costs aren't allowable. So you at least have that very basic but solid grounding in what an eligible project looks like and what costs you can claim for. Okay, so that's number one. People just don't understand the criteria. The second big mistake we see, and this is actually something that's becoming more and more prevalent, is claiming for work that isn't science or technology. So as I said when I was talking about eligibility, the fundamental thing is it has to make an advance in science or technology. I have dealt with one of our clients recently who had a client of theirs who was doing something and it fit all the other criteria. They were doing it the scientific method, they were doing experimentation, they were doing trialing, but it was in an area of social science and it's just not eligible. There's nothing you could do. It's a black and white thing. It's either science or technology or it's not. And there's no way around it. There's no fudging it, nothing like that. The problem tends to creep in where it's a social science thing, but it looks like science, or you could argue it's maybe science, but it's on the edge. So these can be things like behavioral studies, nutrition. We get a lot of people saying, well, I've put together a training platform for MDs in the startup industry, and it's really good and it's really innovative, and all the training's being delivered in an innovative way, but none of that advances science or technology. There was some chat at the recent Research and Development Consultative Committee with HMRC. They were seeking some opinions and ideas about whether this should be extended to cover social science. So potentially this could change in future, but for right now, a key thing to do is just to make sure that you know that the work you're claiming for takes place in an area of science and technology. There's nothing else for it. So number one, not understanding the guidance. Number two, comes down from that, claiming for work that isn't science or technology. Number three, this is a particular bugbear of mine, but not involving the client enough. So a lot of the time, when I've maybe got involved in inquiries where someone else is prepared to claim, or similar situations with our clients, what the claimant company, and now they are responsible for their own accounts, their own tax comps, their own claim. And they're saying, HMRC are asking these questions, but I don't know the answer because my advisor put all that down and I don't know anything about the claim, or I don't even recognize our R&D in the way it's described and I'm not sure how to defend the claim. So there's an understandable thing that kind of drives this, which is the key thing that an R&D tax advisor, anyone that's advising an R&D tax does, is try to reduce the burden on their clients. So obviously you don't want to say to your client, I need you to spend a week just analyzing all your projects, tell me which ones you think are eligible, you need to read all the guidance, you need to understand everything, and then you tell me, because what's the point of an advisor in that situation? But what we've seen, what I've observed, is that some advisors are taking this too far. So potentially doing things like writing project descriptions without speaking to the client. So almost going to their website, looking at what they're doing, going, well, I've worked with a similar company before, I'll write out a project description. We've also heard of companies who will add in staff apportionments without talking to the client. So basically saying, oh, it's fine, we've dealt with a company like yours before. They had the people with these job titles had this apportionment, people with these job titles had this apportionment. We'll just do that. And we've even, which is something that makes me wince every time I hear this, heard of companies that will submit a claim without even getting the sign off of the client. So in all of this, I mean, for a start, how can you know what you're submitting is even true? If you haven't spoken to the client, you don't know if Bob Smith spent 20% of his time on R&D. If you've put that apportionment in, there's no way. If you haven't spoken to them about the project, you might have got completely the wrong end of the stick. The stuff that you've picked up from their website might have been 3 years ago and out of scope. You need to make sure that you're giving accurate project descriptions of the work that the company did in that claim period, that they've assessed the projects that did in that claim period, and you know how many of them are eligible, and that they've told you how much time their staff took. There's a lot you can do around that to take away the burden, but there are key things that the client has to do. And fundamentally, the claimant company has to have full knowledge and understanding of the claim before it goes in. And I'm going to go as far as to say it is just not possible to prepare an accurate claim without the knowledge, involvement, and approval of the claimant company. There's no way you can do that unless you're fly on the wall and you just hang out in their office for a year and you see all the R&D go through. There's nothing you can do. So involving the client is incredibly important. You'll get a more accurate claim, more robust claim, and a much, much more defensible claim. And that's the really important part. So fourth thing we see is people getting confused about which projects you can claim for. So what they'll say is, well, the company they're a software development company, they did 100 projects this year. They're all technical, they all involve software development, therefore they're all eligible. And that's not true. Just because a project is technical, it doesn't mean it's eligible R&D. So you can have, for example, an implementation of a new software system. It involves software, it's a lot of work, it's a lot of expense. Just implementing something off the shelf isn't an eligible project, no matter how technical it feels. Installing new machinery, again, you might be bringing new machinery, you're having to integrate it with things you've already got there, but none of that involves an advance in science and technology. So again, wouldn't be eligible. Upgrading machinery, improvement of your technical processes, all of these feel like they are technical projects and they could feel like they're R&D, but it's really unlikely that every single technical project that any company, no matter how cutting edge they are, do involves eligible work. So what you do have to do, and it harks back to the last one, you do have to sit with the client. And even if you don't, obviously if they do hundreds of projects in a year, you can't talk about all of those in detail, but you do need to give them the tools or use them yourself and differentiate between projects that have sought to make advances in science technology and those that didn't. And you have to exclude all those ones that don't. And this can be a big problem. I've seen this in inquiries where it's like, well, why did you claim for these 7 projects? You know, these 8 are fine, but these 7, they don't look eligible at all. There's nothing there. In HMRC's eyes, that obviously makes them suspicious of the entire claim. So you've got to be really, really careful that you're only including projects that actually involve eligible work and not lumping all the technical stuff together. Okay, so the 5th thing we see, so this is getting a bit more down into the detail, is you maybe have understood, you've understood the guidance, you've dealt with the client, you've made sure you're only doing eligible projects. But then what we see a lot is people going, right, so project A, that was eligible, therefore all of the cost of that project can go in. And that's generally not true. So any project, any commercial project within a company will have eligible and ineligible phases to that project. So if you can imagine the beginning, you've got your market research, your competitor analysis, all that kind of thing, where the board level or the project managers, they're sitting around and talking about, should they even embark on this project? What's the benefits of this? Doing, you know, return on investment analysis, all that kind of thing. None of that is eligible because none of that does anything towards making advances in science and technology or resolving those technical challenges that we talked about. So, and this is directly from HMRC's guidance, the eligible project doesn't start until the work to make the advances started and the technical challenges have been identified. So until you know there are technical challenges and you've started the work to resolve them, that's not R&D. Anything that happens before that isn't R&D. And then you've also got to remember that when you get downstream of that and the technical challenge has been resolved, the eligible project finishes. So anything done after that point on marketing, even optimization of the technology, once you've resolved your challenges and now you're just optimizing it, there's nothing there. Anything working on kind of packaging, even the color that you decide to do, it's not eligible. And you can't include the cost of that phase. So you've got to be really, really careful. And this is something, again, that if HMRC were to ever open up an inquiry into a claim like this, they will say, well, why have you claimed for costs on marketing? That's not an eligible cost. You can't have that. And again, it's going to prejudice them against the claim in its entirety. So you've got to be super careful to just focus in on the costs that were incurred during the resolution of technical challenges and nothing else. So again, only claim for the eligible parts of the project and not the kind of commercial wrapper that goes around a project. And then the last but not least mistake we see made is not paying attention to actually what's in the accounts. So figures in an R&D claim do have to line up with the figures in the published accounts. Again, this is something that can be done. I'm not saying that anyone directly commits fraud. I did have a client once who asked me to put in £4,000 of utilities costs when his account said he'd got £400 of utilities costs, and I just have to push back and say I can't make up numbers. But you've got to be careful that it makes sense. So generally speaking, if HMRC are looking at a claim, the first thing they're going to do is hold the claim up and the accounts up and make sure they make sense. And if there's discrepancies, they're going to ask questions. Why wouldn't they? And it's not necessarily, again, a direct thing, but for example, grants. If your accounts say, right, you received £50,000 of grants in that claim year, and none of that is reflected in the claim, the first thing they're going to ask is, we had these grants, but they're not for R&D. So you've got to be kind of proactively trying to make sure that you're covering off any questions HMRC might have if they're looking at the two things together. So that's why I'm saying here, the best practice and the way that generally most kind of consultants would do it is to put in the total costs for any category of allowable cost and then state how much of that relates to R&D, because that's far more kind of in keeping. So if you've got a staff cost, make sure the staff costs in the claim are the same as the staff costs in the published accounts. And then if you say only 10% of that was for R&D, HMRC say, okay, that makes sense. Whereas if you only include staff costs for R&D and then you say it's 90% of that, that makes them go, is this the whole staff? This doesn't make any sense. It doesn't line up with the accounts. What have you done? And it invites questions. And as I say there, absolutely never, ever, ever exaggerate costs in the accounts to increase the eligible spend. We do get the occasional person coming to us and saying, oh, but if we just bodge some costs in there and change this around here, then can we get more eligible spend through? And my answer to that is don't commit fraud. Just don't. There's no other answer to that. Like, you have to just do the accounts the way you would do them and then make the claim on that basis. And just make sure that, as I say, the two things line up, and then you're not inviting any questions from HMRC that you don't want. So that was my kind of 6 biggest things I see as mistakes in claims. Just to reiterate this again, this is something I say every single time. There's so many reasons not to claim. And I know, obviously, if your client wants you to claim, it's very difficult to push back, but absolutely don't claim if the work doesn't fit HMRC's criteria. No matter what, no matter how low risk it is, no matter how small the claim is, it's not worth the risk to you, your reputation, to your client. If it doesn't fit HMRC's criteria, just don't claim. Other reasons not to claim could be that the company can't produce a competent professional in the relevant area of science or technology. So if you can't see anyone that, if HMRC were to ask questions, you'd be happy sitting in front of them to talk about the technology, it should at least make you pause and wonder about whether it's worth doing and whether this claim is actually eligible if no one around is a competent professional in the area of science and technology. And the other thing is, obviously, if the company hasn't been advised by a competent professional, so either someone in-house or someone that they have brought in as a subcontractor, that R&D is necessary. So if no one has said, oh, you need to do R&D because this is difficult, if they've just done something, thought it was difficult, it's possibly not a claim. So you've got to make sure that a competent professional was involved and the competent professional thought they needed to make an advance in science and technology to achieve whatever functionality or product that they were trying to make. And finally, if you or your client don't want to claim, don't claim. I've dealt with clients that have felt forced into claiming and then ended up in an inquiry situation, and that doesn't feel good for anyone. And I would say increasingly the clients of WhisperClaims that I speak to are pushing back on, for example, claims produced by third parties that they don't feel are eligible. And I think it's really important for your own kind of professional reputation, all that kind of thing. If you're not happy with a claim, don't submit it until you feel happy, and don't feel pressured to submit it at all if you're not ever going to feel comfortable with it. So as I say, it's almost as important to look at the reasons not to claim as the reasons to claim. So at this point, I'm going to pass back to Suze for a moment before we get to the Q&A.
Okay, we've already had a few questions coming in. Thanks, Jen. That was brilliant. Just one point, I've just asked somebody to clarify. Sorry, it's an anonymous person, so I don't know your name. Just clarify the context of one of your questions so we can hopefully answer it a bit more fully. Just before we go to questions, though, Jen's popped up a slide about our training. So just a quick reminder, anyone who's already been on our webinars will know very, very well. We run a couple of training courses each month now. So we've got 2 courses running per month, the fundamentals of the R&D tax relief scheme, and also how to identify eligible R&D clients in your client base, both delivered by Jen. Here. We've got dates scheduled until the end of the year for both sessions, and the links to those are on our Eventbrite page, which I'm just going to pop in the chat box for you in one moment. Be sure to book swiftly as there's limited places and they do get sold out fairly quickly. And also, if anyone's joining us today who's interested in seeing a demo of our WhisperClaims software, I'm also just about to pop my contact details in the chat box as well, and also the link to our book a demo page on our website. So please do feel free to get in touch. Okay, so let me do that in a moment. Let's just go to questions first. So Jen, I've got some quite broad questions here for you, so I'll just go down the list one by one. So the first one is, what is science or technology? I'm presuming somebody's asking. Clarify that.
That's a good question. Now, I can't off the top of my head remember HMRC's exact definition. There is a definition of what is science or technology in the CIRD 82900, but essentially it's quite a circular definition usually of what science or technology is. But from their point of view, science is the natural sciences, so biology, chemistry, maths, physics, that kind of stuff, and then technology is the application of those sciences. So I will say that there could be an argument around the definition, but from HMRC's point of view, it is science is something that can be linked back to the natural sciences, and technology is the applied use of those, at its most basic.
Brilliant. Thanks, Jim. Okay, next one, again, quite a broad one. What is HMRC's plan in relation to claims submitted a few years ago which were not eligible?
So I'm assuming this is in reference to my comments about potentially opening the scheme up to social science. They've not got that far yet. This was, I think, quite a kind of casual, people have been saying that we should maybe extend the scheme to social science. Could people submit, potentially talk about claims or companies they've seen, claims they could have put in but didn't because it was social science? This is going to, I'm assuming that at some point this will turn into a consultation. They would seem to do very regular consultations. It was touched upon in the more recent consultation that ended this month. That was a more general thing around the scheme, so it's touched on a bit there, but it'll be a long time before there's any kind of guidance on actually would they let you resubmit claims that you didn't because they weren't eligible at the time. I would assume it won't be retrospectively applied, but it's hard to know at this stage.
Great. Okay, next one. If a company creates their own software to solve a problem, even though that software is already commercially available, would that constitute as R&D? For example, rather than them purchasing the commercially available software, they developed their own version of it.
So it comes down, and I know this is such an annoying answer that I give, but it depends whether it involves an advance in science or technology. So I've always said that, for example, if you wanted to build Google again, you wanted to recreate it. Okay, Google exists, the functionality exists, but how to achieve that isn't necessarily available in the public domain, and you have to do R&D to generate that knowledge. Then potentially, yes, you could do that. However, if you're almost using the commercial product as a blueprint and the information is in the public domain about exactly how to achieve all the functionality in the programming language you're using, that kind of thing, it's unlikely that it would be eligible. So it just comes down to essentially, yeah, whether you can show that advance is being made in science and technology, so in this case, obviously in computer science in some way, and whether there were technical challenges and what those technical challenges were. It's quite a difficult one. I mean, HMRC allows for, I'm going to keep going on this, but if you read CIRD 81900, they describe 4 types of eligible work. And the fourth one is duplicating something that already exists in a better way using science or technology. So you are allowed to duplicate things that already exist, but it's quite hard to demonstrate that an advance has been made and that the knowledge and how to make that advance wasn't available in the public domain. And that's the bigger challenges around that kind of project.
Okay, great. Thanks, Jen. So I had a question that I'd asked for some more information on, so thank you to the anonymous question there. So Jen, the question is around in respect of colouring in the context of packaging, and the colouring is important. If the colouring is technically difficult, i.e. there'd be a need to use a whole different material, and it's uncertain if it will work, would that be eligible?
So yeah, that was a bit of a flippant comment I made. What I was referring to there is, so say you developed a new iPhone and you've got amazing new technology, you've got plenty of R&D because this new iPhone is amazing and it does things it's never been able to do before, and you made advances in computer science and engineering, that kind of thing. And then the downstream part of that project is to meet with the marketing team and say, what color of box should we put it in? That wouldn't be eligible. All of that discussions around packaging it, what Apple products are like, they come so beautifully packaged, and there's a lot of work and time and expense that goes into developing that, but it's not eligible. It's a marketing tool almost. If, however, someone wanted to produce packaging, as you say, with a certain color using different materials, and you had to do R&D and you had to make advances in material science and chemistry to be able to do that, of course, that would be eligible. I've done claims before with companies that made crisp packets, for example, because they were a printing company that printed onto crisp packets, and they were experimenting with different materials, different inks, all that kind of thing to produce more vibrant colors, more long-lasting colors, all that kind of thing. So there is eligibility in producing colors. All I'm saying is, if the choice is, should we make this iPhone purple or black, and you could achieve that using ways that you've done 100 times, then that wouldn't be eligible.
Okay, thanks, Jen. Next one is, I heard that structural engineering can also be part of R&D, so can a construction person claim R&D?
This is one we get a lot, actually, and I feel like it's on my list to talk about at some point. It's R&D in construction, or I've already talked about it. It's hard to remember these days. In general, there's not a huge amount in construction. There's nothing to stop. So the key thing to realize about the R&D tax relief scheme, the way it's set up in the UK, is anyone from any sector could claim as long as the work they're doing meets the criteria. Within construction, not a huge amount of the advances, or not much of the innovative work they do is actually R&D in by HMRC's definition. So a lot of it will be around improving logistics, all that kind of thing. A few years ago, though, there was a lot of work for doing kind of modular builds off site and then building them on site, but that's become quite a standard way of doing things now, so there's less in there. There is R&D in construction. It's just there's not as much of it as you might think, because a lot of what they do, as I say, is kind of logistical advances, or takes it's taking stuff that maybe that's been developed for commercial buildings and applying it to domestic buildings, that kind of thing. So there's a lot of kind of cross-fertilization of ideas and innovation within the construction industry, but it doesn't mean that every time you move something into a different area, it's R&D, that kind of thing. But there's nothing, scheme-wise, structurally, to stop a construction engineer claiming, as long as they can show that they've made an advance and that they had those technical challenges along the way.
Brilliant. Okay, next one. What would you suggest if you believe an R&D company is putting claims through that are not eligible as a result of inexperience? So they're inexperienced.
That's a very political answer. It's a difficult one. It would depend on, I kind of guess, where your information is coming from. So if you're seeing claims coming through from your clients done by a third party and they're consistently not good and you think it's an experience, then obviously you could speak to them. You could speak to your clients to put them off using them. It's a very, very difficult one. At the moment, there's not really an avenue for reporting bad advices to HMRC. Again, the consultation that just finished, there was a lot in that around how could HMRC police the scheme better? How could they do this? And I think everyone I know that spoke to that responded said there needs to be more regulation of people in this industry. You need to be, because at the moment, I say there's no regulatory body, there's no regulations at all. There's not really any fallback other than just trying to stop your clients using a bad advisor. I say I don't know of any avenue for reporting people to HMRC. They're not. I mean, we have highlighted where we thought people were being actively fraudulent to HMRC, but that's a very different thing as to kind of inexperienced people putting together claims badly. So at the moment, I'm not sure what the answer to that is or what avenue you should take when you're kind of trying to deal with it.
Okay, thanks, Jen. Okay, another one. Can you guide me as... So I'm just trying to reread this question because it's regarding furlough payments and whether furlough being received should be considered as a grant.
So furlough payments are not a grant. There is some information, I can't quote CIRD reference, unfortunately, but there's some information in CIRD now around how to treat all of the different coronavirus fundings. But furlough payments are not a grant, but you also can't include them in a claim. So what we've been advising people to do is either take out the furlough payments and staff costs before you put into a claim and then apportion it, or include the furlough costs but then adjust the apportionments accordingly for the time they weren't in. Because obviously by definition, someone that's on furlough couldn't be doing R&D because they couldn't have been working. So the key thing, as I say, is just to make sure you've excluded the payments, but you don't have to treat them as a grant. So it doesn't affect a company's ability, for example, to claim through the SME scheme, anything like that, because the furlough payments didn't pay for R&D and aren't treated as a grant.
Okay, thanks, Jen. Next one, the question is, are competent professionals only people who have a degree or career background in physics, biology or chemistry, or do people such as engineers count?
Engineers would absolutely count in that, because essentially engineering is applied maths and chemistry, almost like you know about materials, you know about how they behave, that kind of thing. So yeah, engineers would absolutely count. It's just about kind of linking it back almost. But yeah, absolutely engineers. But it is people with some kind of experience in that area. So yeah, engineers would count, software developers would count. Software is essentially maths as well. So yes, you do have to have experience in a degree, but it doesn't have to be in, you know, one of the 4 kind of core sciences or anything like that. As long as you've got something that you can link back to science and technology, it'd be fine.
Okay, great. Thanks, Jen. Okay, another one here. Can a limited liability partnership make an R&D claim, e.g. if one of the partners was a corporate client, or is it purely companies that can make a claim?
Could you say that again, Suze? Sorry.
Yeah, I'm not sure it 100% sense. Can a limited liability partnership make an R&D claim is a question. And then e.g. if one of the partners was a corporate client, or is it purely companies that can make a claim?
So an LLP can't make a claim. LLPs aren't subject to UK corporation tax, so there'd be no mechanism for them making a claim. If one of the partners was a corporate entity that had to pay corporation tax, then potentially if the costs are going through, if they're preparing accounts and preparing a tax computation, all that kind of thing, then potentially that corporate company could claim for themselves, but you wouldn't be able to claim as part on behalf of the LLP, basically. So if that makes sense. So it's always got to be an entity that is subject to UK corporation tax, basically. So we usually say you have to be a limited company. There's a few very slight exceptions around that, but they have to be subject to tax, otherwise there's no way to claim it.
Okay. We've got tons of questions coming through. Just so you know, Jen, so just everyone, we'll keep going until just around 15:15. And if we can't get through them all, then we'll find another way of answering them and get those pushed out to everyone who's attended today. Let me keep going. So one from Michael here. When a client is challenged, their claims challenged, should we speak and deal with HMRC directly, or should the client manage that discussion?
That's it's a question for your client. Generally speaking, when I've dealt with this in the past and when we've seen this more recently, it's a good idea to deal with it on behalf of your client. If you prepared the claim, especially, it kind of takes the stress away from them. But at the same time, you have to involve your client in it. So even if you're the kind of mouthpiece for the inquiry defense, it's a good idea to, it's essential to run everything past your client. And if HMRC asks, for example, for a face-to-face meeting, then it's best to do that with both your client and yourself in the room. So you can be there in the role of their advisor, and take the burden of, sometimes it's about speaking to HMRC in their own language, and that can be really difficult for the end client. So you can be there almost as a translator of making sure that everyone understands what the questions are and what the answers are and that kind of thing. But in general, I would say you should be managing that communication and looping your client in as and when necessary. Or that's the way it's done, I suppose, and that's probably best practice.
Thanks, Jen. We had another question. What if the information of how to obtain the industry baseline is not in the public domain?
So that's absolutely fine. So when I was talking before about the ability to claim for duplicating existing processes, that's essentially what it means. So as I say, if you want to make a search engine that's as fast as Google's code, algorithms, all that kind of thing aren't in the public domain. HMRC allow for trade secrets. They allow for, just information not being available at all. So it's absolutely fine if you have to recreate that knowledge for yourself because it's not available. That's fine. You just need to be able to show, if HMRC were to come back and ask questions, you need to be able to show that you almost did that research. So the client would need to show that they did a thorough Google search, that they looked at industry publications, that they tried to obtain the knowledge in some way before they started. But of course, most companies will do that as standard because no company is going to waste money on R&D if they could have found the information a different way. So it's generally something that's done. But yeah, absolutely. The scheme does allow for, as I say, trade secrets and that kind of thing. If it's not there, it's not there. And HMRC won't object to you then recreating it yourself.
Okay, thanks, Jen. Okay, so I'm just trying to read this one and make sure that I'm going to make it make sense. So we've had a question that says, in your software under the heading area of, this is a WhisperClaims specific question, area of science, says that some areas of business do not qualify for R&D. One of these areas is business and management. What does this mean? as we have a client we intend to submit a claim for and is probably in this area. They have developed new software for the insurance and mortgage market for financial advisors.
Okay, so the key thing about this, so to take it away from the WhisperClaims question, the reason that we do that within WhisperClaims and that we do that anywhere is that you'll have your commercial drivers for the project. You'll have your commercial outcomes. So they're working in business and management because they're producing software for a particular sector, but the advances they're making are in the area of software, not in business and management. So that's the key thing you need to do, is look at what they're doing and link it back to within the WhisperClaims software. We've got a list of loads of areas of science and technology. If you're doing it yourself, you need to kind of, I would say you have to go under the hood, go a few steps down and actually look at what area of science and technology they're advancing. Because obviously you can make software for the financial sector, you could make software for retail, but you're not making advances in the financial sector or in retail, you're making advances in software. So it's taking that step away from the commercial outcomes and the outward almost functionality created by the R&D and looking underneath at what area of science and technology was advanced. And that's, for the WhisperClaims users, that's how we'd answer that question. Is it's not about the industry they're working in or the outcome. It's about what area of science and technology they advanced along the way.
Brilliant. Thanks, Jen. Okay, I've got another long one here for you, and we've got a few more. So as I said, we'll keep going for as long as we can for one. I can see people have dropped off, so if you need to go, then feel free. So this one is, what is your view as to whether relief can be claimed on intercompany recharge costs within a group, e.g. one company pays for costs that form a part of another group's company's R&D, and this is recharged to the correct company. For example, staff employed by another group company used that undertake the R&D for another group company are treated as EPWs or consumables. Sorry, the sentencing.
Okay. No, it's fine. I think I know what that's asking about, so I can probably go for it. So it's absolutely fine in that situation. So especially with the staff cost situation, it's allowable to, so if you've got a holding company that employs all the staff and then the staff work for another member of the group, that member of the group does R&D, and then there's an intercompany recharge to cover those costs, it's absolutely fine to then include those staff as EPWs. Other costs, it would depend on the nature of the cost, the nature of the kind of arrangement between the group companies, but specifically about staff, it's absolutely fine. It's something I've done myself several times in different claims. It does make a very weird looking claim where you've got no staff and lots of EPWs, but again, it's absolutely allowable. You have to be quite careful around directors in that situation, because directors cannot be EPWs. So if the directors are not paid directly by the claimant company, they're paid by the holding company, there's an exception would have to be made, and you'd have to look really carefully at how that was managed. But for general staff members, absolutely fine to include them as EPWs.
There's just a second part to that question, Jen. It says, does posting these to intercompany loan account does posting these to intercompany loan account qualify as payment, or does physical bank transfers need to be undertaken, or does it not qualify at all?
So we had a debate internally and then with some of our clients about what payment meant in this context. I would have to go away and double check the outcome of that debate. I don't want to say one way or the other because I can't entirely remember which way it went. So what I can do is go away and look that up, and then if we can work out who it was, Suze, we can send a wee email with the answer to that one. But generally, yeah, I can't remember, so I can't give an answer. I don't want to say the wrong thing.
Okay, whoever that was, you posted anonymously, so if you want to send me a direct message in the chat, we'll contact you back directly. Okay, I've still got loads of questions to do, so we'll just do one or two more, and then I think we better call it a day because I'm sure everyone's probably needs to get back. So let's take this one here. Is it okay for the treatment of intangible assets in the accounts to differ from the treatment in a claim, e.g. when purchasing IP, would it be tangible assets on the balance sheet and not in the profit and loss as an expense?
There's a lot in that question.
There, isn't
there? So just to throw it out there for a start, purchasing things like IP isn't an allowable cost. Patent costs, IP costs, that kind of thing is not an allowable cost in an R&D claim anyway. If something is capitalized as a tangible asset, you can't claim it in an R&D claim. There's certain intangible assets you could include. In general, it's costs that would go through the P&L that you'd be including. If, for example, a company capitalized staff costs as intangible assets, then potentially there are ways, and I'm not an accountant, so I'm not going to use the right words, but there are ways to include that in a claim. But tangible assets can't be included. And just to throw out there, that legal costs such as purchase of patents, IP costs, all that kind of thing, you can't include it anyway. Suze, you're muted.
Sorry about that. Let's go for one more. We'll do one more. What is HMRC's inquiry window for opening inquiry into a claim?
So we get this question a lot, and the answer is we're not 100% sure. Basically, our observation is that if you haven't heard within about 3 months of submitting the R&D claim, you're probably not going to hear. What we've seen again quite recently is though HMRC sending almost holding letters within that window and then not coming back with the questions for 3 to 6 months after that. In terms of the kind of allowable window, I think it's depends on the nature of their questions. So it could be up to 20 years if they think fraud has been committed. So it's the same as any other tax affair, any other tax issues that HMRC might have. They have their different windows around the issues they might have. I have never seen a purely R&D inquiry opened up much outside that window of 3 to 6 months after submission. Sometimes if HMRC open an aspect inquiry or have other open up an inquiry into some other area of the company's tax affairs, they do in that situation quite often open up the R&D just as a check to see whether that was done properly or not. And that can be, I've seen that 3 or 4 years after it's been submitted. So the window, their kind of allowable window, as I say, is the same as for any other tax issues within a company. Generally speaking, though, it's quite quick. So as I say, 3 to 6 months after submission. If you haven't heard by then, you're probably not going to hear, but don't hold me to that because it's not something they publish or talk about.
Brilliant. Thank you, Jen.
Cool.
Guys, I think we've run out of time for today, so I'm so sorry we didn't get to everyone's questions. That was absolutely fantastic. Thank you all so much, all for those, everybody participating. I've already messaged a couple of people in the chat box and we'll get back to you. Thank you for revealing yourselves. Hopefully we've given you lots to think about today. I think the key thing that Jen was putting across there is that a lot of the issues that she's talked about are in fact avoidable. So do take the time to get to know and understand the scheme. And here at WhisperClaims, we put a lot of time and effort into making sure that the reports that our system produces are robust, accurate and compliant with HMRC's guidelines. If anybody does have any questions that spring to mind following today's session, please check out my details in the chat box there and drop me a note or get in touch via the website. We're always keen to hear your feedback and also get your input into any other subjects you'd like to hear us discuss. So let us know. That's us for today. Have a brilliant week, everybody. Take care and we will see you soon. Bye-bye.